I'm a big fan of keeping it simple. So what if I told you you can start your trading day profitably in just some few minutes without getting lost in complicated indicators or endless chart patterns? Today, we are going back to the basics, a simple proven day trading strategy for beginners that's been refined by professionals. This strategy could become your new favorite. By the end of this video, you'll have a beginner-friendly way to understand technical analysis without feeling overwhelmed. You only need two indicators, both simple, visual, and already available on Olymptrade: the stochastic oscillator and the commodity channel index. But before we dive in, remember to like this video and subscribe to the channel for more videos like this. Let's break down why this combo might even surprise experienced traders. You might be thinking that I've used the commodity channel index or the stochastic oscillator before. So what is new about this? The key is using them together, which gives you an early momentum signal from the commodity channel index and precise overbought and oversold timing from the stochastic. And the best part is, this combo works great on the Euro-US dollar, gold, composite indices, crypto, or any liquid market. Because they are both oscillators, they'll filter out sideways noise much better than moving average crossover alone. So you will need the commodity channel index with a period set to 20, which happens to be the default. So you have the default 100 and the negative 100 bands highlighting overbought and oversold levels. Next, we add the stochastic oscillator with the percentage K set to 14 and percentage D, that is the smoothing, set to 3, and a slowing period also set to 3. These are the default values and they can help you smooth out the short-term price noise. Now that you have your chart set up, let's walk through exactly how to interpret the signals and place your trades. For a buy signal, you wait for the commodity channel index to cross above 0, just as we have here, indicating price momentum is shifting to positive. Then you look out for the stochastic percentage K cross above percentage D when both are below 20, which usually happens when the market condition is coming out of an oversold condition. For a sell signal, you wait for the CCI to cross below 0, just as we have here, which indicates that price momentum is turning negative. Then you look out for the stochastic percentage K crossing below percentage D when both are above 80 and coming out of the overbought zone. If you spot a signal on a 15-second chart, but the 1-minute chart shows some kind of a selling momentum, you always need to hold off in order to align with the broader trend. Most beginners chase extreme readings like the CCI above 100 or the stochastic stuck in overbought, but that's reactive and not proactive. Trading for profit is all about timing and sequence. If the stochastic crosses before the CCI confirms, you need to wait. And if the CCI sparks with no crossover in the stochastic, you need to skip it. This strategy only works when both oscillators confirm the momentum shift within a few candles of each other. That's your signal. Momentum plus timing equals entry. Remember, the strategy itself is only half the battle. Your mindset and risk management completes the picture. This strategy works best in ranging and slightly trending markets. For high volatility news period, you can add other indicator filters to reduce the market's noise. If you are curious about combining moving averages with oscillators, check out our EMA strategy video and the video on the awesome oscillator and the rates of change strategy. The links are in the description. Hit the like button, leave a comment about your favorite indicators or your go-to indicator combo. Trade smart, trade with structure, and I'll see you in the next one.
Olymptrade. Care that counts.